All right, here we are. It's 2026 and Rach, our predictions are here today as well. We're going to open up a crystal ball. All right, we're going to create our own crystal ball about finance predictions and property predictions right around the country. We're going to go deep dive into houses, units, apartments, suburbs, everything in between. What's your prediction, Rach?
Oh, my top prediction for 2026 is that Brisbane is going to be hot.
Brisbane's hot.
Yeah, hot.
Well, it is, metaphorically speaking as well. Look, I love that one. I might agree with you, but I might not. I'm going apartments.
Okay.
Yeah, I'm excited about the apartment market, which is groundbreaking for those who have supported us over the years because I've never spoken about that before.
I am shook.
Yeah, you're a shooken. All right. Well, without further ado, let's shook into this. Where do you want to kick this off? Let's start with maybe finance because that's your bread and butter.
Sure.
Interest rates.
Now, do you know what? I usually have an opinion on interest rates. For the first time in, I would say, a decade, I have no opinion on interest rates. I just don't know what's going to happen. I've watched different commentators talk about different things, and there's a few different banks that are predicting a rise. There's a few different banks that are predicting it's just to be stable. And there's another economist that I watched that's saying there could be a cut. And I think everyone's got really great merits around what they're saying. I am saying I actually don't know about interest rates this year. I'm thinking they're going to be quite stable though either way. What do you think?
Sitting on the fence. You get splinters doing that. Look, I think I'll give away my third child if this doesn't happen.
Okay.
I think there'll be a rate rise in February.
Okay. So we're recording this on the 28th
8th of January.
8th of Jan, so next week?
Yeah. So it'll, I don't know when it's coming out.
It's on the 4th?
RBA.
Yeah, it's next Tuesday.
Right. So I'll be either right or wrong by the time this drops. I just think unemployment's down. Inflation's up, not where it needs to be or wants to be, according to the government and the RBA. And house prices are just steamrolling ahead. I can't see any reason why they won't just put the brakes on a little bit next month.
Okay, well, my positive outlook is going to hope otherwise. Now, I read a report on the way here this morning that was from KPMG that said that they predicted that property prices were going to continue to grow.
Yeah.
And they've actually given a figure to say that they thought it was going to be 7.7% overall growth in the country. Tell me what your prediction is.
Yeah, so everyone loves a statement, don't they? So. And they do a lot of research and they're very good at what they do, KPMG. I think, let's look at that figure, 7.7. That's generally, I think 7.4 to be exact, has been like the 30-year average of growth in Australia for houses.
Yeah.
So you're pretty much running in line with that. So that doesn't surprise me. It doesn't knock our socks off. I think when you break that down, that's might be Darwin at 4%, Perth at 12%, Adelaide at 1%. Like it's just an average of everything, isn't it?
So it really doesn't help us to know what the national are going to do.
It's a nice little labelled heading that says, well, that's cute. Property prices are going up in 2026. Fantastic. Close the book. You've got to get down into the rabbit holes and see, well, first of all, what individual markets are doing.
Okay.
But then secondly, what does that mean for me? Right? Am I buying? Am I selling? Am I doing nothing? Like, what does that mean? So yeah, I think they're two things you'd need to look at.
Yeah. So tell us a little bit more about what you think about regional and different markets, because you just said that that's all these different markets. You threw away some different figures around there. So what do you think? Let's break it down. What do we think we're going to see some huge movement where?
Well, I think it's very hard to break so much of it down, and no one's like, we're doing an episode on our thoughts and it's not advice and all those sort of things. And at the end of the day, no one knows.
Yeah.
Right. You could have 100 economists in the room and 99 of them will be wrong. One of them might have fluked it. But I think some of us go on logic, some of us go on facts, some of us go on what's the wind doing sort of thing. If you're watching on YouTube, I just lick my finger. But I think generally speaking, 2025 had growth almost everywhere you looked, right? So I think that's going to trickle into 2026. I think that will continue to be the case. There are some markets that I believe may be starting to be overheated or overpriced, right? So I look at somewhere like an Adelaide that's got a median house price of around I think 880 or 900k versus say a Melbourne that's like 920, 930.
Yeah, wow.
So when you look at that, and this is where my logic comes in, I'm like, Melbourne, Adelaide, right? Melbourne, largest city in Australia. Adelaide, I don't know. Gold Coast almost big, I don't know. But it's down there. So I just think two things. Adelaide potentially comes to a slow. Melbourne gets going. Right. Now, Victoria's been on the nose generally, hasn't it, for a few years, and the government and all these bits and pieces, and the stamp duty's higher and there's a bit of land tax. If you live in it, there's no land tax. But I think it's too affordable not for it to grow in 2026 is my prediction on Melbourne. And I think Adelaide will just cool the jets a little bit, right? I'm just going to go on a rant here. I'm just going to continue to go. So like I'm just... pulling them from everywhere. But I think Perth, household income, fantastic, like plenty of jobs, plenty of migration, and still affordable. So I think whilst Perth has come from a long way back and had a good 3 or 4 years, I think it's still got some movement in it. And generally, now when I say generally means in the good areas. Right, if you're going to buy 50k's out of Perth on a 300 square metre block and a brand new house and land, that might be a different conversation. But generally, I think Perth's got some legs about it. I'll have a break and go to your Brisbane.
I want to hear more about Brisbane because everything I hear is Brisbane's going to be hot. I feel like it's going to be and some people are saying it's tapped out, but I think there's a lot going on in Brisbane. And tell me what your thoughts are. Yeah,
I think Brisbane, and again, we said it before, the Olympics stimulus and all those sort of things get some people's emotions going about let's go to Brisbane. Southeast Queensland, unbelievable place to live and visit and play and everything else. Get plenty of work there. The opportunities and the affordability is pretty good in most parts. There are areas that I think are not overpriced, but starting to get on the border of unaffordable because the locals are saying, I can't afford to live here. Yeah. So I think there'll be some parts that'll slow, but I think generally Brisbane as a LGA, I think has a good year ahead of it. Why do you think Brisbane has legs?
It's just the talk. Everyone I'm speaking to seems to be wanting to invest there. And I'm talking to a lot of people that have moved there in the last, say, 5 years from Sydney that are then talking about how much they love it.
Yes.
Other people are moving up. So there's a lot more. It's not just an investor place. There's a lot more people that are moving there because they want to live there.
Yeah.
And there's a lot more bigger incomes that are going with that as well.
You're right, yeah. And post-COVID, we can live and work with a lot of variety, can't we? So we can live in Brisbane and our head office is in Sydney, for example. We might fly down there or if we need to. But yeah, so you raised a point there about Sydney. A lot of people moving from the south to Brisbane or southeast Queensland.
Yes.
On those wages. So that's great. The affordability is fantastic. They want to live in good areas. So that's the Brisbane LGA. But the other part of it is Sydney's unaffordable.
Yeah.
So when some place is unaffordable, what do? Well, we either suck it up and try and find a higher paying job or we get the hell out of there. And their version of get the hell out of there from Sydney is straight to Brisbane. So that's where Brisbane, I think, I agree, has got some legs.
So tell us about what you think is going to happen for Sydney then over the market. What's your prediction for Sydney?
I'm not bullish about Sydney, to be honest. I think it's and in my own little ecosystem, I talk to a lot of people that, well, all of them say I can't afford to buy in Sydney, and they grew up there. They grew up there. So what are they doing about it? They're moving out, or they're not buying in Sydney. They're renting in Sydney. But I think all that said, it's unaffordable to buy in pretty much every suburb within 15 k's of the CBD. Right? So even land out at like Camden and those sort of places like Campbelltown and Parramatta, and like you're talking $1 million minimum, right? So I just can't see where the growth's going to come from there. And I like if it's 2 or 3%, yep, that's great. But I think if it's any more than that, I would be knocked off my socks.
Now, your top prediction was apartments. Tell me about that. What's your prediction for apartments? Because that's not like you.
It's not like me. Can I do that later?
You can.
I want to stay on the capital city.
Stay on the
rant.
capital cities.
Yeah. So Sydney, I'm saying flat to minor growth. I'm looking at Melbourne. I'm bullish. I'm bullish about Melbourne. I just think, affordability. Even though a lot of migration out of there to go to Queensland, I think there's still enough coming in to support that. So I think it's very affordable. It will grow. Where are we going? Hobart's got some legs. Yeah, it's still reasonably affordable. Darwin will have some growth, but it's more of a speculative market for me. So I'm not excited about going to invest in Darwin, but people will make some money in Darwin. That could be. I wouldn't be surprised if Darwin has 8 to 10% growth this year.
Really?
Yeah, but I just wouldn't go and invest there.
Why?
Too speculative, too transient. People don't stay there long. Like it'd be a short play, which again I'm not into at this old time in my life. So that's sort of the capital cities. I don't think we've missed. Oh, Canberra. Canberra just does Canberra things. Like it's good yields, it's good incomes, good reliable government work. So it'll continue to trickle. It won't be outstanding, I don't believe. But it is quite unaffordable for a lot of people to enter the market there, as most capital cities are. I think, and I'll talk about this more when I yarn about apartments, but I think there's a general consensus. There's a bit of oversupply in the Canberra space, in apartment space. But but what I do like are regionals.
All right, tell us more about that.
So regionals, and a bit on the back of this Sydney commentary where it's unaffordable for people. So they're making these lifestyle changes, and Central Coast is one of them. You and I,
we love it.
We grow there. We live there. We love the area, but it's, let's call it a poor man's Sydney, right? It's $1 million. You can get in for $1 million. You can't do that in Sydney. You can commute to Sydney each day if you wanted to, but you can work from home quite comfortably. You can get employment there. So I still think it's very affordable, along with Newcastle. So these sort of sea change and see forced changes, right? They're moving. Ideal world, they'd love to live in Sydney, but they can't. So where do they go? They go to your Central Coast, your Newcastle, your Wollongongs. Still have the beaches, still have the weather, but they're able to live their life comfortably without a $2 million mortgage. So I see those sort of larger regionals having a good year, but I also see the more affordable sort of 5 to 700k market regionals going well because of, again, the affordability of people coming in. Now, people get confused with population growth and naturally thinking that property will grow as a result of population growth, right? And you and I have spoken about this before. Like growth is a good indicator that something's expanding. So there needs to be new infrastructure, creates more jobs. Like it's generally a good thing. Government puts more emphasis on it, etc. But if the demand, so the supply is overheated, then you've got an issue with that. So not all population growth means capital growth. but it's a good starting point to look into it. And Geelong is an area that's got high population growth.
Okay.
It's like over 2%. So Sunshine Coast and Geelong, top two locations in Australia for population growth last year, or last 5 years. Yeah. So
I wouldn't have picked Geelong.
well, not many do. So this is the whole Victoria's on the nose sort of thing. It's like when you delve into it, you can see that, okay, Geelong's got high population growth. I can get to Melbourne in an hour and I can buy a house, 3-bedroom house in a reasonable area, a reasonable suburb for 700 to 800.
Yeah.
Right. So that's an hour from Sydney, hour from Melbourne. An hour from Sydney, you're paying $1 million, 1.5 for the same asset.
Yep. So I can see where you're going with
You get the logic?
Yeah, I get it.
So I'm not totally a gut feel person, but definitely a logical person when it comes to, well, why wouldn't you? Take the emotion out of it, take the stamp duty, the land tax, all those things about Victoria. It's got some momentum, or I believe it's got massive potential.
I'm too desperate to get into apartments.
Let's have a break and then we'll get into apartments.
This is Property is brought to you by Sphere Home Loans. Sphere Home Loans is a mortgage broker that helps our listeners all around Australia. So, if you want to get into your first home sooner, looking at upgrading, an additional property, or want your current mortgage reviewed, just search Sphere Home Loans or click the link in the show notes, and their dedicated brokers will be able to help you wherever you are. If you are, however, after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. That's moneypodcast.com.au and click Get Help.
Okay, so we're back. Now, have you ever bought an apartment, Rach?
I've never bought an apartment.
No. Unit?
No.
Nothing.
Nothing
other than the glorious land.
Yeah, you know what I like.
I do. And look, I've told this story on the podcast many times. Bought a 1-bedroom apartment in Brisbane.
Yeah.
I want to say 2013. And basically for 10 years it did jack squat. The yield was good. So it didn't cost too much to hold. But there was an oversupply of units and apartments circa 2016 to 18 in most parts of the country. So that meant that rents were stunted and growth was stunted as a result of oversupply. That's what oversupply does. Fast forward from COVID, and guess what? Anything that has a roof over its head is in demand, right? Massive supply. And we've spoken about the fact that we had Jeff Lucas on the show, and he spoke about the amount of developments that weren't being developed. So that's meant that a lot of these apartment markets have grown, and shown a lot in the last couple of years. Okay, so I come here with some sort of trepidation when I'm saying that I think apartments have potential in the next 12 months because of that extreme demand to get into the market for first home buyers. The downsizes, there's like 150,000 a year, I think, downsizes in that want to downsize into something, baby boomers into retirement, right? So where do they want to live? They want to live in areas that have got amenities. They might not even need a car. They want good public transport. They want to be able to go out for dinner, et cetera, et cetera. Does that make sense?
Yeah.
So not all apartments are built equally, and not all apartments you want to be buying into. And mine was a 1-bedroom apartment and still is today. Thankfully, I've held on to it because it didn't define me. So, and it's had some good growth in the last couple of years. Would I buy a 1-bedroom apartment? No. Would I buy anything less than 50 squares internally? No. I want something 80 to 100 squares internally, ideally, because that's where you get your 2 bedrooms, 2 bathrooms, right? We don't want 2 beds with 1 bathroom.
No.
We want to have, we can rent it out to 2 separate people, or parents and 1 child, or downsizers that want their own separate bathroom, etc., etc. So, and we also want to talk demand of something that's niche, right? So a 1 bedroom, 1 bathroom, 1 car is not niche. There's thousands of them, okay? And we want to try and stay relatively low in terms of the number of apartments within the complex. Now, this is where it gets tricky, because what do they want to do? They want to build hundreds, maximum amount that council allows them to. So 300 in a complex is not unfamiliar. So we want to try and buy something that's ideally niche within that complex. So that might mean higher floor, it might mean larger internal space, etc., etc.
Okay. So your prediction for apartments is that they are, for the right apartment, you're going to see some growth in 26.
Except in Adelaide.
Okay, tell me about that.
Oh, I think there's oversupply there already. I can't see it happening there. There's too many cranes in the sky there. There's actually, for those that love data, there's a report that's given every quarter by a company called Charter Keck Kramer.
Yes.
That, and I've got the November one here in front of me. And that shows not only how many apartments we've got, but how many are launching, how many are due to complete, and how many are under construction, right? And how many, and actually how many are marketed, right? So you see the full gamut of flow through from I'm marketing this apartment through to it's now just been completed, through to how many have we now got on the ground. Right, and the take-up rate of that. And what we're seeing with that is Adelaide and to a lesser extent Canberra is there's some real signs of oversupply there. Not necessarily back to the 2016-17 days where there was huge oversupply, but it's trending the wrong way.
Yeah. So I read a report that said that the Australian housing problem, and we talk about cycles all the time, the Australian housing problem isn't cyclical, but it's actually a structural problem. And we've had a massive undersupply of construction or underbuilding for the last decade. And that's exactly the reason why we are where we are. And it has nothing to do with the property cycle.
No.
Do you think that that's going to change, or do you think that there's any positive thing coming out of the construction industry or the development?
Yeah, there's no doubt that the government are putting an emphasis on it, right? They're putting it in the media, this is what we're going to do. We're promising to build 1 billion houses in 3 years, blah, blah, blah. Conceptually, that's great, but they've got to change the way they do things. Like, why can't you build prefab homes and plonk them? Like, there's got to be a quicker, smarter alternative that cuts out the red tape and just builds them and puts them on the ground and moves on, sort of thing. Like some of the issue is not the build time frames. The issue is everything else around it that comes with it. Sitting in council, all the services, the power, the water, the sewer mains, all of that is a complicated mess. So until that changes, I don't think we're going to see dramatic change there overall. Will there be some catch up? Yes, but it's going to trickle. Yeah. So that's the conundrum we're in. Is you're still going to have that supply demand issue that's going to work in the favour of those who own real estate, but there are markets within markets that say, well, we physically can't afford to pay more, so we're not paying more. So we've got to be wary of those as investors. We don't want to go in, and I'm speaking purely from an investment point of view, we don't want to go into those markets. Like one I was telling you about in the Logan Shire, right, in Queensland, median household income just over $1,000 a week, median house price, 750, 800 grand. Like they can't afford too much more price growth in that region for the locals to be able to not be able to afford it and upsize and all those sort of things. Yeah, there's going to be issues for years to come in that space, but that doesn't mean there's not going to be oversupply of one-bedroom apartments, for example.
Yeah.
Enough of my speaking. What are you seeing from a lending point of view with government schemes?
Yeah, well, there's definitely a take up of the government schemes. Late last year, we had both. There's some federal support that's come out or schemes that have come out. The 5%. Now, the 5%, the government 5% deposit scheme. I wish they'd make it a little easier to say, but the Australian government 5% deposit scheme that has had a big take up. But we saw investors beat the first home buyers to the mark. So the last quarter of last year, it was investors that grew, at a much more rapid rate than first home buyers, even though the support that was coming in was for first home buyers.
And do you think that's because investors just went in non-emotional, we need to buy?
Yeah, so first home buyers, they're making an emotional decision. So just because the government come out and go here, and they did it so quickly, they said, here's a great, way to help more people get into homes sooner.
Yeah.
But you've got to stop, you've got to think, you've got to make an emotional decision about what we're going to do. Where an investor goes, they're doing something, let's buy because we know that that's going to drive the market. And they're right. So they make really quick decisions. So we saw investors just surge in the last quarter of last year. My prediction is that's going to continue in 2026. I think investors are going to continue to move in the market. But I do think there is going to be more expansion of both federal support for first home buyers and also state support. And we've already seen it in Queensland. There's been a change where the government in Queensland are going to do a trial at the moment where they're going to have 1,000 first home buyers that are going to come in with even just a 2% deposit. And actually it's going to be the government that's lending them the money. So I think we're going to see more changes of different state and federal support for first home buyers because they need to make that shift from investors to first home buyers. That's where they're trying to help people into the market.
It's a great initiative by the government, isn't it, to put that into play. I wonder how it'll play out when you see what you mentioned before about investors jumping the queue.
Yeah, well, I always thought they might do something to hold investors before they brought that scheme in because it felt like you were just watching something happen that we all knew was going to happen and it played out exactly the way that we thought. But I really do hope and maybe if there is a rate rise, or it will be yesterday by the time this ends, maybe that will slow some of the investors because it does. Yeah.
Do you think the lending conditions will change for investors?
Well, I would be surprised, and we saw APRA come out and make some, warning shots to the banks late last year to say that we would like you to slow investor lending. I think that will continue. I think there will be some levers pulled in 2026 to try to slow investors. Now, if rates were to rise, that would be a natural slow for investors. But if they don't, they're going to have to do something to slow investors, and that might be some policies with banks to try to slow that down and then give the first home buyers a chance.
Yeah, interesting times. Like we said at the start, we don't know what's going to play out. No one does. But I think a lot of us as investors are out there saying, well, how's this all going to play out? And I think my thoughts on it for you people are, what's in my control? What can I do about it, right? And it may mean you need to pivot slightly. So, for example, if there is a rate rise in the next couple of months, my borrowing capacity might reduce. And I might need a slightly higher yield because the running costs are going to be higher. So that means I might need to pivot to a slightly different strategy. Not just, right, so now that's happened, I'm out and I'll go and do something else. I think it's just adjusting with the times.
One prediction that I have that I'm pretty confident on is that the rental squeeze will continue. I don't think that's going anywhere. No. I think that's something that we're going to see travel all the way through 26. So the rental squeeze, whether you love it or hate it, it's here to stay for the foreseeable future.
Yeah, unfortunately. And even as an extension or flow on from that, the homelessness issue that we've got. So that's not a good outcome for anyone involved. So yeah, I agree. It's a real issue.
Yeah. Have you got any other predictions for 26?
Oh, I don't think so, Rach. I'm nearly out of predictions. So I just, Look, I'm wary that there's so many people that have made some really good money in real estate in the last few years, either their owner occupier or their investments, and I don't want to call it the winner's curse, but I sort of am. It's like, well, okay, now I want to go and do something with that money, and everything's heading in the direction of it's going to be a great year for growth, and in the majority it will, but don't just go in without any thought or reason for doing so, and do your research accordingly, because there'll be markets that start to slow and may. Once they may slow for some time because they've come from such a long runway.
Yeah. One thing I'm excited about in 26, I think that technology is going to have a really big impact on the way investors transact. I'm really excited that you've got Luke Metcalf coming back from Microverse.
Yes, yeah, he's coming back. I'm excited about that. We've got some pretty solid guests lined up for 2026 too, from a podcast front, haven't we? So
we do.
And one of those will talk a bit more about technology and what that's going to bring to the industry, because you're right, that is a potential game changer, because the way real estate is transacted in Australia at the moment is out of date. It's clunky, isn't it? I think there can be more transparency, and I think there can be more of a level playing field for everyone, which I think we're starting to see in the tech space.
Well, I'm very excited to see what happens in 26.
So am I, Rach. Any parting words?
No, I just think it's going to be an interesting year for everybody. I think we're going to see some big changes happen in different markets, and I'm excited to see it. Absolutely.
As always, make sure you check your own backyard first, do what's in your control first, and then, we're talking market predictions and specifically talking type of property and location, because that's maybe what people want to hear, but the back end stuff is probably just as, if not more important in itself.
100%.
So, hit Rach up if you want some sort of financial loan structuring going on, not financial advice. Hey, if you're on YouTube, hello.
This is our new studio.
I was going to say, we're in a new studio, so it's a pleasure to be here on the new studio. Smell of new carpet.
It does. It smells very fresh.
Yes. So hit the subscribe button if you haven't already on the YouTube, and if you haven't been on the YouTube, make sure you get on the YouTube.
Get on the YouTube.
Yes. Until next time, I'm John, this is Rachel, and this is Property.
Any information given in this podcast is for entertainment purposes only, and you should seek your own property advice before acting on anything you may hear in this podcast. If you want to start or advance your property education journey, John Pidgeon's book, Sort Your Property Out and Build Your Future, is available where all good books are sold, or via the link in the podcast show notes. Opinions or comments from any guests on the podcast are theirs and not those of the hosts, the publisher, or their respective license holders.